It is now a glaring fact that the economy of the United States has become frighteningly unstable. The truth is that it has been unstable for longer than most people realize. There are many black swans pointing to disaster. However, the US, being the superpower country it is, had made everyone, including the government, believe that things will blow over. After all, this is not the first time it's happened. But can things blow over this time? Or will this unstable economy see a mighty collapse? In today's video, we're gonna find out if the signs are pointing to a recovery or a collapse, how bad the current situation of the economy is, and what exactly are the things that have brought about this instability. Going forward, let's take a look at the opinions of Diane Swonk of Grant Thornton on this disturbing issue.
Well, it's really a reality check. What we saw is that the markets had gotten very complacent about the risks out there. What we call black swans, rare events, are now the norm. The second largest economy in the world slowing has an effect on the global economy. The Federal Reserve talking about reducing their asset purchases, no longer providing quite as much support for the economy and for financial markets.
It is true that the US government and the Fed are complacent about oncoming reality. But, as we previously stated, everyone seems to believe that the US is an indestructible economy that will recover from anything. While this has been true in times like 1980 and 1982, when the economy was shaken by a recession, the Reaganomics came to the rescue. Ronald Reagan's government employed drastic means to combat recession. They reduced federal income taxes, cut down government spending budget, and maintained low interest rates. The formula was successful and brought about an economic turnaround, but it may not be so easy now. Let's take a look at some of the black swans we face now. In the wake of the COVID-19 pandemic, the global economy has become more unstable than ever before, and the first big scare is the global stock of debt, which is rising at an unprecedented level, making it very difficult to achieve any kind of economic equilibrium. And America is not exempt from the debt stock. In fact, America's debt is in the trillions, and there are not much avenues being used to service this huge debt. And everybody knows that with debt left unserviced, disaster is a matter of when and not if. Inflation is another hanging shadow, as the annual inflation rate in the United States has now soared to 8.6% in May 2022. The highest it has been since December 1981, and more than market expectations of 8.3%. According to the Organization of Economic Cooperation and Development, prices in the United States rose at a pace of 4.7% per year last year, higher than any other economy in the group of 7 advanced economies. Inflation in the United Kingdom, for example, was only 2.5%. There are also growing concerns in the real estate market that demand will drop due to real estate prices surging as high as 15% and up to 5% increase in mortgage rates, which have significantly reduced housing affordability by 29%. These figures have led many, including real estate experts, to believe that a dramatic reduction in housing demand will occur, resulting in an inevitable housing market crash. If the fears come true, this will be a major blow to the economy that will be tough to recover from. You would think that a government neck deep in debt would cushion its spending, right? Well, not the US government. In fact, government spending is also one of the factors putting pressure on the economy. So much pressure that it just might break. In a recent study conducted by the Federal Reserve Bank of San Francisco, it was revealed that the several pandemic relief packages could be responsible for contributing 3 percentage points of the rise of inflation. The extra cash infusion into households saw an overwhelming demand which supply couldn't keep up with. People just kept buying. The coincidence of the pandemic also ensured a shift in demand of sectors, as all the money went into goods like furniture, cars, and electronics, as shoppers redirected money they might have otherwise spent on restaurants and travel. But in the midst of all these growing concerns, there are hopeful signs that maybe, just maybe, the economy will be just fine. Unemployment, for one, has fallen by an impressive 8.4%. Job creation continues to rise with an estimate of 1.4 million new jobs created. Weekly earnings have increased by 5.2% compared to last year. There's an estimate of about 1 million new businesses formed. But will these be enough to sustain the economy, or will it crash regardless? For now, we can only hope. That's it for today's video. Thank you for watching until the end. Be sure to give this video a like, subscribe to the channel, and share it with your friends. We all could do with great news.